Hi everyone, and welcome to this week's Epic's chat. My name is Debbie, and I am head of the UK for Epic. At Epic, we fight to change the lives of disadvantaged youth through our portfolio of high-impact organizations all around the world. Now, before we kick off, I know you're dying to ask Fred your burning questions. You can do so at any point in the chat. Just do so in the chat box, which could be on either side, and make sure you upvote the questions which you're most desperate to hear the answers to. Now, over to you, Anita, who is our COO.
Thank you, Debbie. We're so happy today to have Fred Destin with us. Fred is a lifelong seed stage investor. Fred, you were a GP at Accomplice and Excel, and you now founded Stride. And Fred is also an Epic Pledger. So for those of you who don't know what the Epic Pledge is, the Epic Pledge is a promise to give a percentage of your success to social good through the Epic portfolio of nonprofits. So when you take the EP, when you join a community of pledgers, the EP is our nickname, short name for the Epic Pledge. You join a community of pledgers around the world who all want to put purpose at the core of what they do. Our work at Epic focuses around a portfolio of high impact organizations that focus on children and youth around the world. And more than ever, they need our support. This week, Fred has chosen to highlight the entire portfolio of 26 nonprofit organizations. So by clicking on the pop-up that pops up also somewhere above me, you can join us in supporting these organizations. And don't worry, if you click on it, it won't take you away from the chat. Enjoy the chat, and thank you, Debbie and Fred.
Thanks, Anita. Hi, Fred. We're really excited to have you here. I'm going to just jump right in because we don't have that much time, and I'm going to do some name dropping here. We've got Deliveroo, we've got Zoopla, we've got CarWow. CarWow. I mean, Kazoo is a great example. You took it on its seed stage, and now post-SPAC IPO, they are valued at 5 billion, which I think is a success by anyone's standards. Tell us, how do you do it? How do you spot these guys so early? They all become unicorns, but how do you find them at seed?
First of all, delighted to be here. For those who don't know Epic, I will tell you that Epic for me is the equivalent of an amazing venture capital firm, in the sense that it's able to select the best places to put money to work and to make sure your money is actually working towards the charities that they're supporting. So that's the reason why I'm here, because I think the level of quality with which they operate is insane, and is a great way to make sure that the money that you donate goes to the right spots. So if your job is to select the best charities, my job, as you say, is to try and spot unicorns. The reality is that it's really not about spotting unicorns per se. It's more about ensuring that the type of companies you back have the potential to become one. So what I would refer to as a glimmer of greatness. And it's true that I've been fortunate enough to be involved with to date $7 billion or multi-billion-dollar companies. And the question is, so why is the hit rate reasonably high? So I think if you think about the business of investing in seed companies, the indirect question we're asking ourselves here is, how do we separate skill from luck? And there is inherently a fair amount of luck involved in the process of startup investing. As one person put it to me one day, or I think I may have read this on Twitter, it's like anybody who invests earlier on the curve than you think is playing roulette, and anybody who's investing after you think is just a banker. But the reality is there is a method to the madness. So what you cannot do is you cannot identify winners at the outset. What you can do is you can be fairly systematic about asking the right kinds of questions to ensure that whatever you put in your portfolio has the conditions necessary to produce large outcome. So at a very basic level, I only have two rules and then a few things that I want to understand. And rule number one is this a founding team that could fundamentally reshape an industry? Now, that's not the same as asking, are the founders smart? Are they connected? Are they nice people? Are they coachable? It's more like, do you have that elusive quality of being able to fundamentally change the game? Do you have the kind of backbone and grit to make this happen? And very often the founders we back are nonconformists. They're not always comfortable personalities, or there are people who mix different areas in very unique ways. For example, TJ Parker at PillPack is somebody who's obsessed with design, but also happened to be a pharmacist, which is a fairly rare combination. Then the second key question you ask is very simply, is there a glimmer of greatness? So do you see some form of uncapped upside? And so the way you try and answer that question is to say, well, is the problem that company is attacking fundamentally interesting? Or is the insight that the team has developed or derived from their observation, is it profound? Is it something that's, are we de facto taking enough risk? Are we trying to climb a big enough mountain here? Because the enemy of venture capital, in fact, is mediocrity. The enemy of venture capital is not loss. What we need is exceptional outcomes. And so you really don't know at the beginning which of your founding teams will deliver these exceptional outcomes. But what you can do is be systematic about selecting projects that offer uncapped upside. And in that sense, aversion to loss is your worst enemy, because we very often draw the wrong conclusions from loss. But it kind of goes against human nature to think, that losing money is totally fine, and what matters is the size of the upside. But that's kind of what we need to do. So some of the things I stay away from, for example, to talk about it negatively, is I stay away from anything that feels like incremental innovation. I stay away from obvious themes or trends where I think I'm going to be fighting a lot of other venture-backed startups. And also, for example, like to take some risks that some people don't like to take. So I like operational complexity. I think if you can crack the code on high operational complexity, usually you will almost by definition create value. So if you go back to Kazoo, which is the example you used, Kazoo fits a number of these criteria. Fundamentally, a very broken and awful customer experience, which is buying secondhand cars in a ginormous market. It's 70 billion pounds per annum in the UK alone. So second biggest only to real estate. And then you look around and you see no strong competing brands. There's no ability for existing players to kind of respond to the type of challenge that we mount. And then, like I said, there is a high level of operational complexity. We need to be able to repair and improve 450 different car models. There's also the problem that capital intensity is extremely high, which makes it fundamentally hard for startups to come into your space. So in the case of Kazoo, you can crack the code on a broken consumer experience in a large market and building a business that's complicated. So that kind of fits all the criteria. So your probability of loss is pretty high because it's a hard business to execute on. But if you nail it, you're building something that's fundamentally defensible. Now, in the case of Kazoo, I'd also say that's an example of situational rent, which is a lot of venture capitalists where they've been successful early kind of builds up. Because I backed Alex Chesterman when we did Zoopla, so we spent 7 years from the seed round to the IPO together. There was a lot of trust there, so I was kind of always going to back him. The last point I'd make on this is I spent a fair amount of time trying to really understand the fundamental mechanics of the businesses that I back. And I can get quite conceptual about this stuff. So I'm really looking hard for businesses that offer real operating leverage and then somewhere the opportunity to grow non-linearly. And I'll abstract myself up a couple of levels to make sure that I understand these mechanics. So back to your point, it's not that you can pick the unicorns early. I don't think anybody can do that. But what you can do is be very systematic about investing in companies that have the potential to become one. And again, if you're disciplined and if you have a system around it, you tend to over time get in enough of them that you can produce the kind of returns that our investors want.
I mean, you said you kind of spent 7 years with Alex Chesterman. I'm not going to name drop again, but you kind of, it's really important to you to take kind of a board seat with all of those companies. Like I said, I won't name drop again. But I'm really interested to know why it's so important for you to take the board seat. And also when we spoke last, you mentioned, my kind of value add is taking them from 10 to 100x. So I don't know if you can share some of kind of the magic of what you share with those founders, what it's like to work with you and how you help them go from 10 to 100x?
Well, like most things in life, I think what's really important is being self-aware and knowing what you're good at. So if you work with my former partner, Harry Stebbings, the 20-minute VC, he's a networking machine. What I'm good at and what I enjoy is really the company building aspect. And for me, everything is an excuse to get into a room with a founder and to talk about product and strategy. That's where I get my kicks. If I look at where I derive the most energy from, it's usually from those processes. So why does it matter to founders? I mean, boards tend to be awful for founders. They're anxiety creating. It's a place where they get judged. If they're found wanted, sometimes they get fired. I mean, they tend to be absolutely awful experiences. But they don't have to be that way. In fact, a high-functioning board can be something that's extremely useful to a management team in terms of delivering spectacular outcomes. So I think for me, question number one is, do you have my back? Are you the kind of environment where instead of having relationships based on power, the power dynamics of money and all that stuff, can I come to my board members and talk about the stuff that's hard? You know, I have a fight with my co-founder. I'm feeling a lot of anxiety because everybody's relying on me for their livelihood and the business isn't working. You know, I have a fundamental strategy problem. So question number one is this an environment of trust where you have my back? If you can do that, you're already ahead because you've now given a forum for the founder to come and talk about the things that are tough. The second thing is indeed, you know, can you help people make the right decisions? And it's not the nitty-gritty decisions, is the 10 to 100x as you refer to them decisions. Like, what are the foundational strategic decisions that we need to make over the life of the company? There may only be 3 or 4 of them, but you know, they can change the game. So to give one example, at PillPack built a consumer business that was an online pharmacy for people who live with complex conditions. So there was a consumer business. At some point, we decided to build what we call the pharmacy operating system. So effectively to build a fully fledged backend, fully abstracted from any legacy that didn't really serve immediately the purpose of the front-end business, but was kind of a strategic layer of software that would allow us to run a full-fledged pharmacy completely on our own. So that decision, which was empowered by the board, which cost us a lot of money, at exit, you know, probably delivered about $500 million in value. Amazon said they paid about $500 million for the consumer business and $500 million for pharmacy OS. So this is the kind of stuff where we must have spent $25 million building it with a high quality, you know, engineering team. And we ended up delivering a much larger outcome because we fundamentally built a strategic brick that was useful. And that came out of discussions at the board where we encouraged the management company to say, hey, we think we can go sell this to capital markets in terms of our capital needs, go build it because there's enough value in it. And we think we can articulate that. So the other thing is you have to help founders look around corners. You know, they're heads down, they're building the business. Sometimes they don't see the big risks that are going to hit them. Sometimes they don't see that the new VP of sales they hired is going to underperform badly and cost them a year of their lives that they don't have. So you kind of also help them to make the hard decisions or to see the risks that are going to railroad them. Now, everything else, reporting, governance, blah, 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 in an early stage startup, all that is decor. All that is a detail. What matters is, you know, are we collectively making the right decisions? Are we collectively getting closer to the truth? And are we empowering our management team to make the right decisions in the right way? That's what I enjoy doing. I have the courage of my convictions. I create conditions of trust with the founders, which means we can have real discussions. And I try and foster an environment in which these decisions get made well. And that's, you know, like I said, it's also what I enjoy doing. I think for me, everything else is an excuse. The fund, the fundraising, the LPs, all that stuff is all an excuse to get in the room and talk about that stuff.
Yeah, I mean, I can vouch. I think you and I have had some pretty interesting chats. Some of them may be a bit more therapy, but you know, Fred's a good one to get in the room at, you know, any time of the day. We're kind of going to go back to your kind of investment philosophy, because when we were talking about it in the pre-chat, I mean, you said a ton of interesting things, but I was pretty interested by your take on data. I mean, you say that kind of data isn't the be all and end all, which was surprising to me, probably kind of to most of our listeners, I think probably surprising to most investors. So when you are looking at startups, like why not data, and what is it that you're looking for if not data?
Sure. So let me take a step back and think about, so if you want to create value in any form of financial markets, but if you want to produce exceptional results, you really can't do what everybody else is doing, right? So we live in a world where competition is near perfect, pricing is transparent, etc. And so you have to know what your core expertise is. Well, our core expertise is investing in ambiguity. And by investing in ambiguity, we come in at lower prices and, you know, we're able to continue to generate value. So I think there's a philosophical thing here, which is we bring as much creativity as ability to analyze data and business model to the table. Now, if we focus on data itself, in an early stage company, the data is at best ambiguous. If you have data, usually you don't have enough of it for it to be predictable. If it's positive, it could be a false positive that is, you know, grounded in a set of strong early adopters that may not at all apply to the rest of the market. If it's bad, it can usually be solved by a pivot on product, on positioning, or on go-to-market. So I want to think about data in the following way. Data points like traction or margins or clients or even background of the founders, they're just clues, but they're nothing more than clues. They're breadcrumbs. And what you're trying to do is assemble the clues into a coherent narrative. So to have a strong view, what happens very often is somebody will say, well, I don't like the margin profile. I'm like, well, okay, so that's an interesting opinion about the margin, but that's just your opinion. It's actually not that helpful. Really, even my opinion is not that helpful. What's more interesting is for you to assemble as many clues as you can. And then once you have enough of them, you assemble them into a system or a mental model. And you understand that when the clues are put together, it's sort of painting a picture that is consistent with the requirements you have. And the requirement you have is to find a glimmer of greatness, this kind of uncapped upside. So I actually really apply kind of a method in my mind, which is number one, posit my own ignorance. When I come into the room, I will unlearn everything I know, and I will have a bias towards the positive. Number two, I gather clues. Data is a clue, but there are other clues. And I gather clues with a very open mind. I assemble then the clues into some kind of framework, some kind of mental model. And then once I've done all that, I start to develop a thesis. And then I let my intuition and my opinions kind of float up very slowly as that thesis develops, and I've gathered enough information to kind of come to a picture in my mind. Then I will do stuff like rational checks, additional diligence, etc., really identify the risks. And then finally, I kind of try and come to a yes/no decision. So I always start from this positing my own ignorance and then gathering the clues. And the data is nothing more than clue. So, what you're looking for fundamentally, you're like, hey, the three things I'm trying to analyze are people, can they reshape their industry? Are they powerful? Can they fundraise? Can they attract stars? Are they mentally agile? Number two is upside. Like we talked about, what's the unique insight? Is it valuable? Is it transformational? Can this investment return the fund? Do we have enough ownership in it? Or if we don't, can we build it? And then you can ask simple questions like, what do we need to believe for this to be big? And then I go, like I said, I go quite deep into what are the mechanics of the business? What makes it non-linear? And then you also try and separate between what is the wedge, so what's the way in, and what's the long-term strategy. Because very often people get stuck on a wedge and say, well, I'm not interested in that business because it seems quite narrow. And they kind of miss the big picture, which is what you do once you've put a wedge into a market and you kind of expand out. And then the third element of that is understanding the risks. So we're in the business of taking risks. The question is, do you understand the nature of the risk you're taking? People, product, market timing, regulatory, competition, business model, blah, blah, blah. And then you have to ask yourself, am I taking enough risk that I can produce upside? And then are these risks, can they be managed? Can they be mitigated? And am I happy taking them? And, at the end of the day, if you think about the product of venture capital, the product of venture capital is a decision-making engine. Right? So we're only as good as our decision making. And so the more sophisticated and kind of systematic we can be at making decisions, the better our returns will be. And that means we need like robust, repeatable, and very honest methodologies for making decisions. And then we're always trying to improve the quality of our thinking. So that's assessing people, that's taking apart business strategies. It also means you're constantly chasing your investment biases. You're constantly chasing their causes, confirmation bias, imposter syndrome, etc. And so we're kind of students, and we're students of collective decision making, and we're trying to help each other in the partnership sort of think better. And I think for me, the central theme is, how do we get closer to the truth together? So it's not about whether we're right or wrong. It's not about whether a company is going to make it, not make it. It's like, how close can we get to the truth of this business together? And then does it fit the type of risk profile that we're trying to take? That's sort of the questions you're trying to answer. Not, is it going to be successful? Is it not going to be successful? Because after half the time, like, we don't know. It's just impossible to know.
Right. So it's essentially kind of a massive puzzle in a way. I mean, you talk a lot about, I think, the glimmer of of greatness. And I think, like most things, you are kind of ahead of the game. You've been talking about kind of purpose since, I saw some articles in 2010. Now at Stride, you talk about looking for startups which are making a dent in the universe. So like you say, clearly purpose is something that's really important to you. At Epic, we ourselves are all about really big purpose. I mean, I think you hit on it in the beginning, but I mean, I want to make sure we have enough time for the AMA. So kind of quickly, can you tell us just a bit about why purpose is so important to you and how that took you to the Epic Pledge?
Yes, so let me first say that we have a tendency to throw words around very freely, and words like purpose and culture as if they were cheap. Purpose is hard earned. Something that is a real purpose that's going to carry you through tough times, that you will stick with, that you'll commit to, is hard earned. But when you have it, it's an incredibly powerful force, because it's the thing that takes you through adversity. It's the thing that you rely on the darkest days. And for me, I found my purpose in being a craftsperson that helps build companies, right? And I think there's something foundational about the act of creation. It's something very human about the act of creation. And creating a startup for me is the same. Now, I do inherently, once I've made that statement, you understand that I care a lot about why people create stuff, right? So what is it fundamentally that drives you, and what is your impulse? And if my impulse is an impulse of creation, I'd rather that these creations be directed toward things that are net positives for the world. Now, I think there is an awful lot of virtue signaling going around, and everybody's impact these days, blah, blah, and great. But again, purpose is something that's foundational. Now, there is nothing that says that we as venture capitalists cannot go talk to our LPs and our investors and say we care deeply about purpose. It's not because we're in finance that somehow, having the idea of responsible capitalism or thinking about the impact of what it is that you build is less important. And I think we have to have the courage to go to people and say, look, we actually care about the mission, we care about the culture, we care about backing people who are not assholes, we care about backing people who respect the feminine, or whatever it is. But on all facets of that, you say, I only want to direct my money towards people who I can stand behind and who I can be proud of. Now, you're not always going to get it right, because technology is not moral by nature, and some companies end up with the right purpose at the outset and producing awful things. But at least you can directionally try and make that part of your mission.
And I think that I'm gonna kind of switch to the AMA, and maybe we'll come back to the Epic Pledge, because there's one question kind of talking about that, about what you were kind of just saying, tech potentially being immoral. And for all of us who are, I see we're getting kind of close to the end of the chat. Fred's given us a couple extra minutes of his time today, so we may go over. I hope you can stay with us. But if we jump to the AMA, kind of directly linking to your last question, I see here there's a question from Jason, which is, as an investor in the tech industry, I've lost now, is there any negative unintended consequence of tech? Is it something to be careful of, which is something you were just touching on? So I don't know if you have anything else to share.
Yes, for sure. So look, there is, like I said, there is no morality in technology. So the reason why people get techno-utopian is because inherently it feels like progress. And so in general, progress has helped us fight disease and all that stuff. But I think we have realized on just about every aspect of progress the limits of it, and technology is exactly the same. So techno-utopians kind of annoy me a little bit, because we have to inject morality and ethics into technology. It doesn't come as part of the package simply because you're innovating. If we look at crypto, it's interesting because on the one hand, you have decentralization and taking power away and giving it back to the creators, and that's beautiful. But you also have very clearly speculative behavior where we're paying high returns to the early adopters and we're kind of passing it back down the line. And so it's a classic example of a utopia where there are clearly people who are playing the game to kind of extract maximum value as fast as they can, whilst pretending to be to be there because they're agents of, the DeFi revolution. So I think you have to be extremely humble with your impact. And I mean, Twitter is a classic example of, it empowered the Arab Spring, and it's also a tool of disinformation. So, we have to constantly go back and think about the morality and ethics of what it is that we do. And then I also think we have to keep in check our own capacity for outrage, because, these days we get outraged at absolutely anything. And, Facebook does research on the use of technology by teenagers. Well, and everybody's upset about that. It's like, well, I bloody well hope they're doing research on the impact of technology on teenagers so they kind of know how to act around it. So I think it's important to stay humble and to realize that we all have a role to play in the responsible use of technology, including not letting it feed our own outrage and our own obsessions, right? So we're all responsible for how we use it. It's not just the technology provider. We are the actors on how this technology gets used. So my role is I can decide where to direct my money. And, to go back to the Epic pledge, well, I can decide to invest in founders with mission. I can also say that the giving world is also a very murky world. A lot of people make it to make themselves feel better. There's a lot of money wasted in the system, as we know. There's very little transparency. So part of the reason why I thought Epic was fantastic is because, well, this is an engine for transparency. Now I know that whatever it is you've selected, I know the money is getting used intelligently. So I can give without second thoughts about whether that's going to pay the salaries of a trustee or something, or whether it's actually being used for the kids who want access to technology to better their station in life. So I think for me, it's a classic example of, even in your giving, you're responsible for making sure that your dollars are going to the right place, in the same way that in our use of technology, we're responsible for making sure that it's a net positive for the world and not the opposite.
Thanks, Fred, for saying all those wonderful things about Epic. Yeah, I feel like immorality in tech is probably, we could spend an hour talking about that. But you spoke about crypto, and one of the questions we have in the chat is, do you think of crypto as the new internet? It comes with these, I didn't add these, the new internet.
Well, yes. So, I think it's a simplistic way of putting it, but actually it's not a bad one, which is, the most fundamental innovation since probably the creation of the web, let's say, started going mainstream around 96, 98. I think this is maybe after, the effects of Moore's law and mobile devices. I think this is like sort of the third big wave in my lifetime that I think is bringing fundamental innovation at many levels. Now, at the moment, there is a cost of entry that's pretty high, because getting your arms around the complexity of what's happening takes some real work, and it's clearly not mainstream. Like I said, it's like the Wild West. There will be a lot of blood on the walls. There will be people defrauded. There will be schemes that collapse, and communities that lose all their money. All this will happen, but underneath that is a fundamental innovation of decentralization and distributed trust, on top of which we're building new applications, new models. And the best example is, power to the creator. We are finally, if you look at the music industry, which has been screwing recording artists for as long as it's existed, okay, now we have a mechanism by which, we actually have the creators empowered to make money directly and to kind of own that, and to reward their fans directly through tokens and all that stuff. So I think it's fundamentally interesting, phenomenal. I also think that the whole metaverse thing is foundational, because you used to collect, if you're a 50-year-old guy with money, you're probably, maybe you might be into collecting watches or cars. Well, now we have digital assets that will live inside the metaverse that our kids will probably be way more interested in having a painting on their virtual wall that they can actually step into, and that is in itself a transformational music experience in 3D or in VR, rather than a boring painting on the wall of their house, right? So, and I'm like, well, that's fundamentally interesting.
Yeah, I mean, who cares about having a Van Gogh on the wall anyway?
It's true. I have one at home if you want one.
Yeah. Right, next question. So I'm powering through. So we've got a question from Nick here, who says that in terms of addressing founders fundamentally changing an industry, how can you or do you judge that, particularly at seed? The challenge is further compounded by the fact that VCs by nature are generalist and don't always have the industry insight that founders do.
That was a very long question. Can you summarize?
Yeah, I'll do it again. How can you be the judge, basically, of if a founder can fundamentally change his industry if you don't know the industry as well?
Well, so first of all, I think it is our duty. So I think it's easy to underestimate the power of analogs, which is what I have found is that if you have an open mind and an open brain, you are able to hear how people go into existing industries, understand their structure, and then see the methods by which they're going to transform them. So I actually find that there is more power in cross-referencing the things I've learned from 7 or 8 or 10 or 12 or 20 different industries and seeing how these mechanics, which I understand relatively deeply, given the amount of time I've worked with startups, can be applied to segments I don't know. So one of my favorite investments of recent years is a company called Unibody, which does higher education marketing. I know absolutely nothing about how universities buy technology, how they recruit their students, etc. But what I know for sure is I understand the power of peer networks, I understand the technology they're deploying, I understand the social levers that they're utilizing to get their product adopted. And I'm like, you know what? I feel pretty well equipped to actually understand the levers by which this company is going to go and offer a value proposition to students that's quite differentiated. So I think this notion, actually the vertical experts in specific sectors are very often the last people to see the disruption and transformation that's possible. And it is such a constant that if you talk to a McKinsey partner in healthcare, he's usually going to be the last person in the world, despite their wealth of knowledge, to see the disruption coming, because you kind of lose sight of what's possible. And so my job is actually not to be an expert in everything, even though I do go quite deep on the businesses. My job is to help the founders make better decisions about how they build their startups, And so that's where I live. Now, I need to understand enough about the reality of the company and the team and how they're operating and what they're capable of delivering and where they're at as a unit. But I don't necessarily need to understand their market that deeply, because I do organization design and I do therapy for my founders, and and I think about techniques for scalability, et cetera, and that's what I apply. It's kind of a toolbox of methodologies and habits and questions that kind of can be applied relatively generically to a number of sectors. So actually, I love going to sectors I don't know, and I find that I have an edge because I bring a different way of thinking. Yeah. So I'm not pretending to be the expert, but I can help you think differently.
Yeah, I mean, I think that's really interesting, and I guess that's something you learn over time. Nathan again has a question which kind of flows on from that nicely, which is kind of looking back or going back in time regarding an investment or relationship with the founders. Is there anything that you do differently or would have done differently?
I mean, we definitely make mistakes. The typical mistake I've done usually is investing too fast, and sometimes we're kind of forced to do it and not having enough time to really understand the fabric of a human. And so, it's like they're, whether they're resilient, whether they act honorably under duress. And, because building startups is really freaking hard. And, when you go to situations that are really tough and you go into adversity, you'll really find out what people are made of, and you'll find out whether they rise to the occasion in ways that are commendable, or whether they start misbehaving, either crumbling, which is I think excusable, but also sometimes misbehaving. So the main mistakes I've made was kind of sometimes not asking the questions about what are you like as a person. And I'll tell you what, these days I usually will go into a session prior to investing. We're like, hey, what kind of family environment did you grow up in, and what did you find tough as a teen, and and just really kind of dig into, and I'm very happy to share my own journey and my own shortcomings, etc. And I'm trying to get into self-awareness and whether people are at one with themselves, right? Whether they're centered, whether they're and whether they're a work in progress from a psychological standpoint, or whether they're in a place where I know they're going to behave, I know they're going to react in the right way when they hit a wall, right?
I think you are just being phenomenal at taking me to the next question, because the next question speaks to that. But what happens if once you've invested in someone, you find out that person is not the nice person that you thought you were? Like, kind of what levers do you have in influencing them, either to kind of, what are your most practical levers to either influence him or her and or sanction them to ever withdraw? So what happens once you've invested if they're not the nice person you thought they were?
Yeah, so it's a good question. So I was trying to think back. It's fortunately not happened that often. I will say that to a certain point, to a certain level, my job is to try and help people think about issues in the right way, come to the right conclusions, maybe think differently. Like I said, just challenge their way of thinking and try and help them raise their game. It is, without a doubt, in some instances, you find that people are just not that interested. And they may be not interested because they're selfish, they're closed-minded, they don't have a growth mindset. And you do absolutely withdraw sometimes, because you know what? You can't help people despite themselves. And they're authorized to lose my money. I'm not going to crucify people, to nail people to a cross because they're failing or they're pursuing the wrong strategy. That's why I have a portfolio. So I'm not trying to be some kind of patriarch, dictating to people how they should behave. And sometimes, we have fundamental disagreements on strategy, and it's like, well, that's okay. It's your business to run. When you have really rogue operators, at the end of the day, the role of the board is to decide who runs the company. So in the final analysis, this is what the board does. So if you end up with people who are really value destroying or who are acting unethically or create a bad culture, you just have to remove them. Now, that pretty much never happened to me. So, touch wood. But if that's your job, that's your job. Your job is not to be agreeable necessarily. Your job is to help founders build great companies. And that doesn't always mean you're a cheerleader and you're like, quote unquote, founder friendly. That means you're engaged in real conversations with them about the stuff they're trying to build. And so it's not always meant to be comfortable, but it's meant to be authentic and real and full of empathy, for sure. But it doesn't always have to be comfortable, because building businesses is hard, right?
Yeah.
As the person said, I think when you really don't agree or you really don't think they're great people, you kind of disengage, yeah, and it's okay. Like you've put your money in and you're in for the ride, but it doesn't mean I have to go spend all my mental energy trying to coach someone who's interested, right?
I'm conscious of time here, so we're probably going to do the last couple of questions. I have a really interesting one from Zara. Hi, Zara. He says, Tariq Fancy recently dropped a bomb by claiming that impact investing is doing more harm than good, and actual change will come from the lawmakers and not from the self-regulating industries. And he was wondering if you had any thoughts on that.
I think any pronouncement that is that all-encompassing is probably wrong. I think what is important, this is what I meant earlier when I talked about virtue signaling, etc. What's important is to be extremely humble about what it is that we do and to try and be realistic about measuring our impact, whether positive or negative. So I think, give you a stupid example, but everybody's like, well, I should buy an electric car. Was like, well, should you buy an electric car, or should you buy a 10-year-old Toyota Corolla? Because I'm not sure that the energetic balance sheet of your 10-year-old Toyota Corolla diesel is worse than your brand new electric car. So, I think this is where you just want to be evidence-based, humble, and keep on learning, because there's a lot of stuff we don't know. And what was accepted wisdom 10 years ago is not accepted wisdom 10 years from now. So I think if we're going to solve things like climate, I think it's like all of us need to be learners on how to act in a way that's responsible. So we know the biggest impact is from the construction industry. So don't build a fucking house if you don't need to. Don't do that extension at the back of your house if you're a hedge fund manager because you want a 6,000 square foot home. Okay, so now you're having impact in front of your own house. Then we know we can reduce travel. So at Stride, we're like, we don't need to go to conferences all around the world. Why don't we reduce our carbon footprint? Now, do I think we're doing anything special? Not particularly, because I get to see my kids more. But it's like you want a multitude of actions. And I think regulation is part of it. I think impact investing is part of it, etc. And we just have to always stay, none of us have the answer and the solution. And I think we need to be collectively, we need more love in the world, we need more alignment in the world, we need more care, we need more hugs, we need more paying attention to each other, to the planet. And I think that what I would say is, instead of pointing fingers at this is good and bad, it's like, let's be evidence-based, let's be people of goodwill, and over time, hopefully we'll have positive impact.
I don't think I could end on anything nicer than what you've just said. So I think, unfortunately, we kind of have to end there. I knew we would run out of time, and hopefully we'll kind of have you back again. Just a couple of things before we finish. Everybody, thank you so much for joining us today. It's been really great to have you. The next Epic chat will be on October 26th with Fanny Picard. You'll get an email afterwards which will have a link. Please register. We'd love to have you. Secondly, after this call finishes, please do stay on for an extra 5 seconds. You'll see a little pop-up telling you about the Epic Pledge. We'd love you to join our community. It's full of entrepreneurs and investors like Fred that add purpose to their everyday kind of working with Epic, just being part of our community. So feel free to ping us with any questions, but obviously we'd love to have you. Lastly, I guess all that remains for me to say is thank you, Fred. It's been so much fun for me, and I guess everybody. We still have loads of questions. We'll try our best to get back to them as we can, but it's been really great having you. I know you're super busy, so thank you so much for giving us your time and your wisdom.
My pleasure to be here, and don't forget to donate to Epic.
Thanks, Fred. Bye.